All right, Oliver, that's right. We have the man, the myth, the legend. Byron Wien is with us this morning. And of course, he has his 10 surprises for 2019. Mr. Byron Wien, thank you for joining us, Vice Chairman, Blackstone Private Wealth. We're so happy you're here.
Well, I'm glad to be here.
I've been going through these and looking at these. First of all, you've been doing these for over 30 years, right?
34 years.
You usually get, what, 5 or 6 of them, correct? Is that right? I've done my homework, you know.
Yeah, you have.
And so when we talk about this, when you say these are surprises, meaning that
I believe they are probable.
Mm-hmm. More than 50%.
More than 50%. And the average investor would only assign a 1 out of 3 chance.
Right, right. So before we get to your surprises for 2019, I'd like to keep it current, which is that you and I were talking about China, which this morning, the latest we're hearing is that they're trying to draw up some details on the negotiations on the trade deal of some sort, 10 points. Lighthizer has to agree. What are your thoughts on China, the U.S., and what will or won't happen, and how catastrophic it may be?
Well, my bottom line on that is that I believe both the United States and China want a deal. And they're prepared to compromise on certain points that are important to both of them. So I think there will be a deal. If for some reason the talks break down, because I think China believes it has the upper hand. Trump always believes he has the upper hand.
Right, right.
So I don't know that Trump is going to yield. And I don't know that China is going to yield. So it's an uncertain outcome. It isn't absolutely clear that there's going to be a deal.
So if the talks break down, then what?
That would be bad for the market. At the beginning of the year, the market did better than most people thought it would because of 2 factors. One, the government workers went back to work.
Right.
And 2, the general tone of the preliminary talks leading up to the trade negotiations with China were favorable. Mm-hmm. If those turn negative, I think it would be bad for the market.
Okay,
After all, the market's up 10% so far this year.
It's
That's
amazing.
pretty good.
I mean, you have one of your predictions, number 2, in fact, is S&P 500 gains 15%. So we're almost there. So do you think, and you expect volatility, is that still on point? So you think a majority is already put in?
Yeah. No, that's, I expect the market to be up 15%. Mm-hmm. People are pressing me now that it's up 10. Will it be up 20? Maybe, but I don't think it'll be up a lot more than 15. I think if it makes it up 15 by the end of the first quarter, it'll slog along for the rest of the year.
The other thing, Fed stops raising the Fed funds rate. You predicted this before everybody else thought it, because in January people were still talking about possible hikes. Now we know that the Fed is on pause. So you already got that one right. You can put a check mark, Byron Wien, on your, I know you get at least half of these correct. The 10-year stays below 3.5%, and that yield curve remains positive. Number 2 was the S&P 500, 15% gain. Recession before 2021 is unlikely. So you're talking about a modest GDP, capital spending, housing. So everybody who's worried about a recession in this back half of the year should chill out?
I think that probably the 2021 forecast for a recession not occurring before then, and I don't even know if it'll occur in 2021. If we get into a recession, we don't have the traditional tools to get ourselves out of it. Ordinarily, you use fiscal and monetary policy. The Fed has already said that it's not going to be accommodative. It's going to be more restrictive, i.e., it's not going to lower rates, but it may not raise rates further. And from a fiscal standpoint, we're running $1 trillion debt.
Right.
I don't think we have the appetite to increase that.
Are you worried about it? Are you worried about the debt?
Yeah, I'm worried about it, but I don't think Congress is going to appropriate a tremendous number of new expenditures to increase the deficit further.
No Brexit deal. How sure are you on that one? 100%? I know these are supposed to be more than 50%. Are you sure that another referendum,
Well,
Theresa May? No chance, no
what
way?
I'm saying is that the Brexit separation, if it occurs, will be very soft.
Right. Okay.
And my feeling is that there's at least a 50% chance, and I think better, that there'll be another referendum and the vote will be to remain.
I wanted to talk about the Mueller investigation, that it results in indictments to members of the Trump organization close to the president. But you say that the president, no problem, stays on board. In fact, I actually heard you recently say that you believe President Trump will be reelected.
I did.
And do you still think that?
I do. And the reason I think that is that I don't believe any of the Democratic candidates that have surfaced so far can beat Trump.
Is this good for the markets over the next few years?
Well, I think that Elizabeth Warren or Bernie Sanders or Beto O'Rourke or almost anybody else you can name, Kamala Harris, would be bad for the market.
So a Democratic win would be bad for the U.S. equity market?
A Democratic win would probably be bad for the market.
Interesting. I also wanted to talk about the inflow into investing in the United States. You actually see some growth for emerging markets, which have been beaten down over the last 52 weeks. But talking about the investments in the U.S., inflow from other countries, you think that may slow some?
Yeah, I definitely do. I think the emerging markets are attractive. They're cheap. The middle class there is expanding. So my view is that they're going to do better.
Tell me about asset allocation.
As far as foreigners investing in the U.S., I think that's slowing down. Slowing down.
And before I ask you about asset allocation, you did make some comments on China. In fact, you said that, and these were in your other surprises, because you have so many, you can't just pick 10. You have the backups, right? And you said that China makes negotiations, continues to grow its footprint around the world with strength while the U.S. further isolates itself. Is that a concern?
A big concern. Look, I think we're competing with China. And the China Made in China 2025 program, the Belt and Road program, there are clear signs that China wants to be a global player. And our America First program shows that we're withdrawing from global involvements.
Let me ask you about asset allocation. Say someone who's 40 years old.
Okay.
How would they divvy up their money? Whether it's cash, bonds, equities, foreign, where would you put it? I'm 40 years old. Where do I put my, whatever, $50,000, Mr. Byron Wien?
I would put 40% long only, 30% alternatives, 15% in equity-like fixed income mortgages, leverage loans, mezzanine financing, emerging market debt, high yield debt, no treasuries, no high quality corporates, and the remainder in cash.
The remainder is a small amount of cash. The top part of it where you said long only, so that would mean what exactly?
It would mean 5% in global multinationals, 15% in U.S. stocks, 10% in emerging markets, 5% in Europe, 5% in Japan. 5% in Japan.
We just got a nice breakdown. And do you have a favorite stock?
I can't talk about stock.
And I know you haven't been talking too much about Tesla, Apple, or oil. You've been staying away from those as well.
No, I think some of the FANG stocks in the correction in the fourth quarter came down to attractive prices.
All right, Mr. Byron Wien, thank you so much for being with us here today on the TD Ameritrade Network. I expect to have you on again so we can go through these, and hopefully you'll get 100% on your surprise.
Look, I've been doing it for 34 years, and I've never gotten more than 1 year. I got 9.